Hi everyone, thanks for tuning into my channel, All Things Accounting. So today we're going to be learning about TAccounts, its purpose, and we'll be running through a numerical example using owner's equity account. So stay tuned and we'll get through this together. So, TAccounts. So, what is the purpose of TAccounts? Well, let's explore a little deeper into that. So, first, TAccounts, we can say that they are in the shape of a T, but they're helpful in learning because it helps us account for certain things in a logical way and in an organized manner. So, it's really a helpful learning tool that represents an account in the ledger. Okay, so it shows the effects of certain specific accounts. So when we do a journal entry, for example, then we could visually see through TAccounts the effect of such transactions on particular accounts. Okay, so it shows the effects of certain transactions on the account. And again, they are called TAccounts because they look like a T. Okay, so on here, normally you would have the account title. Okay, so it could be cash, any assets, liabilities, equity, revenue, expense, anything like that. On the left side, you would have the debit side, and then over on the right side, you would have the credit side. Okay, now if the debits, the sum of all the debits is greater than the credits, then you'll have a debit balance. And conversely, if the debits are less than the credits, the totals of them, then you would have a credit balance. So normally you would normally see debit balances for cash or any assets, because normally they would have debit balances. Okay, so what we're going to do now is we're going to go through a numerical example just to see how the numbers flow through using a capital account. Okay, so let's go through a numerical example here. So we'll draw the T account here, and we'll say that, we'll just use my name, Michael Capital. Okay. Always remember that on this side, there is the debit side, on that side is the credit side. We know that owner's equity tends to have a credit balance. Okay, so let's say that I infused an initial investment of $10,000 into this business of mine. Okay, so that would be recorded as a credit balance. So let's say that it's I have a consulting business and I've earned $2,200, say. So because that's revenue, remember that revenue is accounted for using credits. So in this case, because I earn it, that would be consulting revenue. Okay, so now Technically, if we were to add the sum up, the capital account would have about $12,200. Okay. Now let's say that I have expenses to run my business. Okay, so let's say that I rent an office space, and on a per month basis, my office rent is about $1,000. So now we know that expenses are accounted for using debits. So on this side, we can account for that. So this would be $1,000, and that would be rent. Okay, so if we calculate the subtotal now, then that would be still a credit amount, but it would yield about $11,200 now, a credit balance. Okay, so let's say that I have other expenses. I have an employee that works for me, so per month I pay her $700. So as that is a salaries expense, expenses are recorded by debits. So salaries here are $700. Let's calculate a subtotal of that. That would work to reduce my credit balance. So that would be coming down to $10,500. Okay, so $10,500 now. So I have, just for argument's sake, let's say I have some more income, and I made I don't know, let's say $1,600 worth more. So that would be $1,600 of consulting revenue. Consulting revenue again. Okay, and if we calculate this, what the ending balance would be, 1, 2, 1. So this would be my closing balance, would be $12,100. Over here would be my opening balance of $10,000 that I initially began with. Okay, so as you can see here through this practical example, T accounts are very, very handy when you want to understand and visually see how the numbers flow. But again, you have to really get down the fundamental and basics of what accounts are increased by debits and credits and what accounts are reduced by debits and credits. Okay, so this is just a simple portrayal of how capital account can be affected by certain transactions. Okay, so I hope this example helped you out and helped you in understanding a bit more about how T accounts work. And so I hope you subscribe to this channel and click on that bell notification icon and like this video. I'll be posting a lot more videos in the future to help you guys out. So until next time.